Why gold is soaring, Fed rate cut predictions, what it means for traders. Gold prices surged as market participants increasingly anticipate a near-future interest rate cut by the Federal Reserve. This surge highlights a common reaction in financial markets, where gold tends to perform well when interest rates drop because the metal itself does not generate any interest or dividends, making it more appealing compared to other investments that do when rates are high. Traders are now almost unanimous in their belief that the Federal Reserve will reduce borrowing costs at its upcoming September meeting. This sentiment has been largely fueled by last week's U.S. jobs report, which came in significantly weaker than economists expected, signaling a potential slowdown in economic momentum. But here's where it gets controversial. Some analysts argue that markets might be overestimating the likelihood or timing of these rate cuts, suggesting that the Federal Reserve could maintain a tighter stance to keep inflation in check. What do you think? Are traders reading too much into the jobs report, or is the Fed poised to pivot soon? Share your thoughts below, because this debate is far from settled. Gold prices hit near two-week high as Fed decisions loom, dollar softens. Gold prices have surged to their highest point in nearly 2 weeks, driven by increasing anticipation of interest rate reductions in the United States. Investors are particularly keen to see how President Donald Trump will proceed with his upcoming appointments to the Federal Reserve, which adds an element of intrigue to the market. On August 5, 2025, spot gold experienced a modest increase of 0.2%, reaching $3,380.20 per ounce by 1:55 p.m. Eastern Time. Earlier in the day, it had already touched its peak since July 24th. Meanwhile, U.S. gold futures also rose by 0.2%, closing at $3,434.70. Interestingly, the dollar has dipped slightly, which makes gold, priced in U.S. currency, more accessible for investors holding foreign currencies. This shift in the dollar's value is significant, as it often influences gold's attractiveness as an investment. Market analysts are currently forecasting 2 potential rate cuts by the end of the year, with the first expected in September. This speculation follows a disappointing jobs report released on Friday, which revealed weaker than expected hiring data for June. In a surprising move, Trump subsequently dismissed the commissioner of the U.S. Bureau of Labor Statistics, BLS, further stirring the pot of uncertainty in the market. Daniel Ghaly, a commodity strategist at TD Securities, commented on the situation, stating, "The market is still reeling from last week's data-heavy week, alongside the Trump administration's decision to replace the head of the BLS. All of these factors contribute to gold's strength and support our belief that the U.S. dollar is gradually losing its function as a reliable store of value. Gold is often viewed as a safe haven during times of uncertainty, particularly thriving in environments where interest rates are low, as it does not generate any interest income. In addition to gold, silver has also seen a rise, climbing 1.2% to $37.85 per ounce, marking its highest level since July 30th. Bob Habercorn, a senior market strategist at RJO Futures, expressed a bullish outlook on silver, stating, "I'm more optimistic about silver than gold at this moment. I believe silver could surpass the $40 mark, and if it does, the next target would likely be around $42. On the other hand, platinum and palladium have faced declines, with platinum dropping 1% to $1,316.35, and palladium falling 2.1% to $1,801.21. In a related development, Sibanye-Stillwater, a mining company based in South Africa, has urged the U.S. government to consider imposing tariffs on Russian palladium imports. This request aims to bolster the long-term sustainability of U.S. palladium supplies, which could have significant implications for the market. As we navigate these developments, it's essential to consider how these factors might influence your investment strategies. Are you leaning towards gold, silver, or perhaps another asset? What are your thoughts on the potential impact of the Federal Reserve's decisions? Join the conversation in the comments below.